Beck is back, back on chain. Welcome to Beck's Bitcoin Bulletin. The waves are running high. The mood in the cryptoverse is at rock bottom. And Bitcoin? Bitcoin is doing absolutely nothing. It sits at around 65,000 and is currently performing at this level, while for weeks now it has been wandering sluggishly within the range of 59,000 to 70,000, and it almost seems as if it has made itself comfortable. Yet only a few months ago, in October, there was pure euphoria. 100,000 was still considered an unbreakable minimum, a psychological level that even I considered practically untouchable. Then Bitcoin a few weeks ago briefly nudged 59,000 and reminded us all that markets rarely share our expectations. Institutions were buying, ETFs were gathering capital, states were discussing Bitcoin reserves, and a U.S. president was positioning himself as the political flagship of the industry. Bitcoin seemed to be shedding the skin of a risk asset and growing into the role of a global store of value. But around the all-time high, the dynamics shifted. Several pressure factors hit the market at the same time. Macro uncertainty increased, risk markets came under pressure, and Bitcoin fell clearly below its parabolic structure for the first time. These factors triggered a chain reaction, and in rare moments this gives rise to a legendary market form, the black swan. With brutal force, it swept through the ranks of holders. Long positions were liquidated, capital inflows cooled, momentum broke, the market tipped over. 4 months later, we are still standing in the aftermath of this phase. Bitcoin, and we holders, have not fully recovered from it. For context, Bitcoin reached its all-time high in October 2025 at about 125,000. Today, we are roughly 50% below. For many, this feels like a disaster, but historically it is not. Bitcoin cycles have never been linear. 2017, 20,000, a minus of 70%. 2021, 69,000, a minus of 55%. What we are seeing today lies exactly within this range. No anomaly, no failure, but a typical post-euphoria reset. While price falls and sentiment turns, something decisive is happening in the background. Bitcoin does not disappear. Institutions remain invested. ETFs exist. States hold Bitcoin. Infrastructure grows. Custody professionalizes. Markets mature. Price corrects. The foundation does not. In the long term, price follows the foundation, not the other way around. That is why experienced market participants see such phases differently, not as catastrophe, but as an accumulation window. When euphoria dies, a base forms. When doubt dominates, positions are built. Bitcoin today is not weaker than in October. It is the same. Still the same scarcity, still the same security, still the same decentralization, still the same global liquidity. And you should definitely not forget about BTC. What has changed is only the price and our emotions. But markets are not driven by emotions, but by structure, liquidity, and time. And time has historically always been on Bitcoin's side. Therefore, right now, the rule is keep it real. Yes, Bitcoin has fallen. Yes, this correction hurts. And yes, it hurts to watch your portfolio shrink. But exactly there, historically, the largest positions were built. Not in euphoria, but in doubt. Perhaps we are right now in exactly such a phase. And perhaps in a few years we will look back at 65,000 the way we look today at 3,000 or 10,000, not as a crash, but as an opportunity. Because perhaps the beginning of the next expansion never lay at the top, but precisely here, in doubt, in pain, and in patience. Therefore, it might be wise to never forget the two most important principles: buy the dip, and as our flagship once said so beautifully, never sell your Bitcoin. Thank you for watching. I wish you a great day. Peace, and out.